Great. Well, welcome everybody to our second quarter StartEngine presentation. I'll let a few people to come in. We have quite a number of people who are interested in this presentation, so obviously I'm excited. So here's how it's going to work. I'm going to present first a few slides and get you some information, and then what I'm going to do is answer your questions. I think that's what a lot of people have been hoping for, and we're going to do it. And obviously I cannot answer all the questions. I'll just answer the ones that me and my team feel is most relevant to the audience. I know you're going to ask me about when we're going to go IPO. I get that question asked every single time. It's probably the most popular question. And as you know, the answer is always we don't know. We'd like to one day have an IPO, but we just don't know. We don't know when it's going to happen and under what circumstances. The good news is, just as an update on the market, you probably saw the Figma IPO, you saw the Circle IPO, Chime IPO, and many other IPOs. And so far, the good news is that these IPOs have done relatively well, which means that the market is going to hopefully react positively to this and allow more companies to go public. We hope. You have to see us. We're not the most anticipated IPO ever. I don't want to make you feel like this is the case. It's not the case. We are a potential IPO, but we're not the most anticipated IPO. And so we're going to have to wait to see how the market develops in the next, I don't know, 6 months to see what's going on and what are the potential. I mean, there's probably 1,000 companies who want to go IPO right now, maybe more, maybe 2,000 companies. Some of them are extremely exciting, as you can probably know the names, and we actually sell funds that contain some interest in those names. But anyway, the point is there is a lot of stuff going on, which is great. It's better than things are grim and not going on. The market it's unpredictable. You probably know that. So anyway, what I'm going to focus on today is on our StartEngine Q2. As you can see on the screen, we did $39 million in revenue. This is unaudited, just so you know. We filed our second quarterly financials. They're available at the SEC's website. And it's roughly 3 times more than we did in the second quarter of last year. So let me go on to the next slide. This is a recap. Again, same thing, 39.8 million revenue, GAAP income. GAAP means general accounting general accepted accounting policies. 3.3 million. Q2 adjusted EBITDA, earnings before interest, taxes, depreciation, amortization. This is called non-GAAP because it's not considered accepted, but a lot of companies use EBITDA as a measure, especially in our industry, in fintech. 6.7 million. So as you can see, it's quite a lot more. And mainly the difference is stock option pricing and amortization of our acquisition of Seed Invest. And Q2 adjusted EBITDA. That's another way to look at the whole thing. You can see a year ago was 550,000. Now it's 6.692, almost 7. Okay. And what's going on? So private, as you can see, private is really driving the majority of our revenue. And what is private? So we create funds. Each fund can have one stock or multiple stocks. We have both. And those stocks can be either direct shares we acquired from the company, or an investor, or a shareholder, or an employee, or it could be shares in a fund that also own those shares. And sometimes it's more complicated than that. But ultimately, the idea is there's an exposure to these companies. So when even when they're sold or they go public, the liquidation value of those events will go to the shareholders of the fund. But the reason people are interested, frankly, is because they want exposure to what we call pre-IPO stocks. Uh, if let's say you wanted Figma shares, good luck, because a lot of the brokers would say, well, we don't have allocation, and so when it goes public and it opens at 3 times more than what it was uh, offered, it's because the demand is so tremendous that there's not enough supply, so the price goes instantly up, which is normal. You can expect that. So if you own pre-IPO shares, you have a chance that if the situation for those shares are that there's more demand than supply and it goes up on the first day tremendously. However, our funds typically would have, because we're pre-IPO shares, because they're purchased before the offering, the IPO, they would have a restriction probably of 6 months, but not always, but many of them have that restriction. So we'd have to wait 6 months from the day of the public offering to sell them. This is contractual. So if you look at the StartEngine Private revenue, you can see that we started in the third quarter of 2023, I guess, and it started growing. As you can see, the first quarter we really started selling it was fourth quarter of 2023, and then in 2024 it did very well. And then you can see that in the first quarter and second quarter of this year, it kept growing. This is basically revenue for the quarter, by the way. And so our quarter at 39.8, just shy of 40 million, compared to a year ago, same quarter, 11.8. Now, keep in mind that it's hard to make comparisons because we can have a great quarter, like the second quarter, much higher than the first quarter, but that doesn't mean that our third quarter will be again higher. And the reason is very simple: is it depends on what shares we're selling from the funds, and some funds are more popular than other because of names recognition and interest from investors. So I would not want you to extrapolate and say, oh, well, then every quarter is going to keep going up forever, and that is not true. It also depends on how many shares we have available, how many funds we have available for sale. It also depends on the popularity of the fund and the amount of shares we can get or interest in the shares. It's not always easy, by the way. Sometimes it's super hard and we can't get any. And there are several names that I won't mention of companies that we want the shares. We can't get them. There's no way. So even though this quarter has been really spectacular, I just don't want you to extrapolate. All right. Well, I really appreciate you listening. I'm going to answer your questions right now. I'll do my best. First question is, please clarify if we have received or will receive splits. I bought shares through crowdfunding at $1.25. I saw they're trading lower on marketplace. Okay, so this is a whole different thing. You're talking about splits, you're talking about shares. Okay, I don't know when you bought it in June. So $1.25 is what we sold shares to the investors to raise capital for the company. The trading marketplace is at the last price that I saw was around 28 cents a share. So why is there a difference between $1.25 and 28 cents? It's very simple. The average trade is around $200. We have a lot of people who got shares a long time ago for a lot less than $1.25 on a split adjusted basis, a lot less. And then also a lot of people got free shares as a promotion. We had to introduce investors as a referral. If they opened an account, they would get $100 a share. And so some people got 10 friends to open an account, some only 2. So the average trade is $200. So, I wish there was someone who would have put together a bunch of money and bought out all that stuff, but it didn't happen. And the main reason is we can't advertise our trading marketplace. Should we were able to advertise a trading marketplace, you would see the price a lot higher because there would be more demand. To the extent that there's no demand because we can't advertise it to non-StartEngine shareholders, well, the only people who are selling and buying are the people who are already shareholders, right? And not everyone is interested in buying more. A lot of them were interested in selling, but not big quantities. So the shareholders who owned a lot of shares are not, at least in my view, not selling. I don't know, I don't have the direct information on that, but that's what's going on. So to the extent that all the people who want to sell at 28 cents or whatever that price is are being sold at $200 at a time are gone, it's probably going to be higher. How much higher? We don't know. Now, eventually, as the demand grows and the supply doesn't, the price goes up, and it can go up over even higher than $1.25 a share. But that's not for us to speculate until the rules change and then we're allowed to market, which is these Regulation A shares. It's hard to imagine that there's going to be a lot of demand. And so we're not seeing a lot of demand right now. There's a lot of demand for our offering that we saw in big numbers. But for trading, you're talking about in hundreds of dollars. All right, so next question is, any plans to integrate crypto this year or in the coming years? Yes, we just integrated in our payment system the stable coins. As you know, stable coins were approved, signed in the Genius Act, and yet it probably is going to take some time for the market to digest all of this. But anyway, we launched stable coins as a payment option. So you can pay credit card, wire, but also stable coins. So that's available right now. And the next thing we're looking at is the Clarity Act. And I wrote an article about it. If you're interested, you can see it on our blog. And the Clarity Act is further allowing us to issue shares for crypto blockchain protocols. And those shares, those securities we sell are usually called simple agreement for future tokens. Those tokens we're selling, their future tokens, once they are available under the right circumstance, can become a digital commodity, which means people can trade, which is really amazing that you could use, in theory, a Reg A, a Reg CF to raise 75 million or 5 million, and then those things become digital commodities under the right circumstances. It's amazing to see that. Now that act is voted in Congress, passed, has not passed Senate. We're waiting for that. Now there's a recess, so who knows, right? When it happens. The expectation is end of September. What are you doing in response to the Genius Act, crypto regulation clarity, the executive allowing 401ks to invest in private equity and other favorable regulations? There is one more regulation. So let me recap all the regulations. One was the Genius Act, stablecoins. Yes, we're going to support stablecoins across the board. Two, there was an act on accredited investors that if an accredited investor takes an exam offered by the SEC, they can, if an investor, a regular investor, takes an exam offered by the SEC, they become accredited. And that's coming out in the next year or so. That's a major improvement because now more people will be able to qualify, subject to taking the exam, and invest in StartEngine Private. So that's number two. Number three is the Clarity Act, which I just explained, which allows companies to raise up to 75 million, and then offer those tokens, which are purchased as a security, but then become a token that is a commodity and can trade anywhere. And so a lot of people in the past were investing in these initial coin offerings, and unfortunately, a lot of them got into trouble because it was a security, and then a lot of people couldn't trade it because the exchanges thought it was a security, and it was a big mess. But now with the Clarity Act, it's cleaned up. That's number 3. Number 4 is the 401k. So you saw there was a news announcement that 401k, which is a massive amount of money, can now, under the right circumstances, invest in private equity, like what we do. However, that means you have to go to the person who's managing the 401k plan and convince them that they should allow the investors to have them choose our funds to invest in it. I'm just letting you know it's not as simple as you think. But these are all regulations in the right direction. What you're seeing is that crypto is becoming adopted as a new form of currency and a new form of raising capital for protocols. There are rumors out there that it's possible down the road that they will allow people to tokenize securities and then trade securities under the right circumstances, probably in the alternative trading system. But again, this is speculative. We don't know. We don't know what the SEC is going to do. But the direction so far with the Genius Act, the Clarity Act, the ability for non-accredited investors to become accredited, and now the 401k, it's all moving in the right direction. Also, don't forget Larry Fink, who runs BlackRock, announced very clearly that he believes that the 60-40 model, where 60% of your assets should be in tradable securities and 40% in fixed income, treasuries, should be 50, 30, 20, 50 becoming the securities, public securities, 30 fixed income, and 20 private equity. Doesn't mean all private equity should be in our funds, but a portion should be. So it's a massive opportunity. Do we have plans to tokenize the securities offered on the platform? Yes, we would like to do it. We don't have a plan right now. And the reason is because no plans from the SEC have been announced, new rules, and obviously we have to wait for the new rules. What's the anticipated share price of the next offering, and would there be another dilution? I can't announce any of that. That is speculative, forward-looking. No, I can't announce anything. No, it's the same thing as the IPO. I can't announce anything because, again, speculative, forward-looking, we don't do. Are you eyeing any potential acquisitions, perhaps competitors to help grow StartEngine Private and further? We would love to make acquisitions. That is a fact. We've made one, which was Scene Invest, and we're very happy with that acquisition. It brought us a very large number of investors and issuers that came on our platform. However, in the world of private, there are acquisition opportunities. We haven't not made them. And I'll tell you how I feel. Should the right acquisition come our way? Yes. Should we go out and spend all our time looking for acquisitions? Probably not at the moment. And the main reason is because, as you can see, in the first 6 months of the year, we have more revenue than in the entire year last year, right? And profitable, more revenue. So the question is, if we're doing well, should we disrupt that momentum? Should we take some risk? And the question is, it depends on the opportunity, and we're willing to look at opportunities. So I want to say we are, but I can also say that we're not pursuing a lot. We're looking at. We're always, I get emails of platforms across the world, and I look at it. So I'm not saying no. We're looking at it, but I also can say we're not engaged in doing a ton of research and contacts and trying to really drum up the market. We're not. We're opportunistic at this point. How do you see the competitive landscape changing in this hot IPO market? Will there be more competition? I think the hot IPO market will certainly drive more people to be interested in StartEngine Private and more people to be interested in pre-IPO shares. I think that is true. The question about competition is we do have some competition that's out there. The question is, will there be new competition? I'm sure there will be. Why not? There should be. Our advantage right now is, first of all, we're well positioned. We have our own, because of crowdfunding. Now think about this. Because of crowdfunding, we have a very strong stream of investors, and some of them very wealthy, who join our platform. So they are on our platform for the right reasons. We talk to them, and some of them invest in StartEngine Private. That gives us a big advantage to someone who's just a fund company. If you're just a fund company, like pre-IPO funds, then you have to still find the investors, and it's not simple. It's not easy to find investors. So typically what they will do is they'll try to partner with other investors and other platforms that have investors. So they'll go to a platform and say, hey, I see you have a lot of investors. We would like to access those investors. We'll pay a share, revenue share, whatever it is that they pay to have access. But that still feels not direct, right? So the investors will have to trust the platform and then trust whoever the platform has brought in as a manager of funds. So we are ourselves the manager of the fund, of the funds we offer. We don't have any third party companies that we've contracted with to manage it. Now we do have in some of our funds shares in other funds. That is true. And then we have also some funds where the shares are just on the cap table of the company, so we own the shares into the fund. So I expect competition, and we should expect competition. It would be naive to think there's no competition. But I think I would like to point out the market is pretty vast, right? And there's probably like 10 to 15 million accredited investors just in this country. And we are, in the thousands. I mean, we just scratched the potential of the number of investors. However, the scaling of this business is difficult because you cannot have more than 100 investors per fund. And so we introduced the IRA, the individual retirement account for StartEngine through a partnership we have. And so we're offering IRAs. The partner we have is called Equity Trust. They're very good. So we're opening accounts now for people who have IRAs very easily, and then they can invest. So I think that's an area of growth that we can build over the next few months that I think would be significant in terms that people who have money to invest can also have IRAs, and they can use the IRA money, which is pretty efficient. But when you say hot IPO market, I don't know if we're hot yet. I think we're definitely warm, but hot, I'm not so sure. Next, any plans to make the private companies fair market value on a quarterly basis? To mark, not to make, mark the company. We would love to do that. And every time we run into this situation called misleading, we don't want to be misleading. So let's say we marked it and showed that you made 10 times your money. And then the company announces a month later they're going out of business. It could have been misleading to say, oh, by the way, it was 10 times more and then it's now zero. I mean, so how are we supposed to do this? We haven't figured it out. That's the honest answer. It's one of our, I would say, business problems that I would love to have the SEC say, oh, here's how you do it, and here's how you should do it. And then everybody agrees on it, and we're done, and we're allowed to do it, and we're not misleading anybody. That would be ideal. My workplace 401k is slow to adopt anything government mandates. Can you help? I don't know. Well, I mean, we can contact your 401k manager and say, hey, here's what we're doing. Would you be interested? Then the question they'll ask me is, how much inventory do you have? And then I'm going to have, well, it's unclear because we sell out all our funds, not almost all of them. Seriously. So they'll be like, well, why are you wasting my time talking about me putting the time to evaluate all your investments when by the time I evaluate it, it's gone. You know, it may take them weeks to look at each deal. I don't have a response for them at this point. I hate wasting people's time, right? I think down the road, I think the 401ks will not necessarily look for pre-IPO, or if there was a large fund, like $1 billion, multi-billion dollar fund on pre-IPO shares, I think that would have a chance, because then it would be, you know, easier for them to invest in it. But given that our funds are no more than 100 investor, I just don't think it's going to work for now. But I'll tell you this. I have a suspicion that the SEC is working on a way to allow some of the regulations like Reg CF, Reg A, and whatever to maybe build funds around them. Right now, it's not possible. It's not legal to offer a fund under these exemptions. Only Reg D, or you register the fund with the SEC, which has massive costs and overhead and massive. So we're in a good spot right now. We don't need to be everything to everybody. We can just focus on what we do well. What are your plans to grow private further? Plans to use capital from the last round to build the team. Partnerships. Yes, we're going to expand our team. We're going to bring in some more salespeople because we have a lot of demand for, and then, you know, we need more salespeople for sure. We're looking at international right now. I'm looking at different countries internationally to see which ones would be a good fit. International also means that we have to either register to become a broker-dealer or partner with a broker-dealer. So it's not simple, but we're looking at that. We're looking at how we can offer more StartEngine Private, more StartEngine Private funds that we've built. The IRA, I think, is important because it gives our investors now two ways to invest: one through their personal funds and one through their retirement funds. And we think that's pretty good. Anyway, so, you know, StartEngine Private, yes, we're gonna try to expand it. You know, we still have 2 quarters this year. It's Q3, Q4. We're almost halfway in Q3. So, you know, I think my proposal to you is that we keep our head down, focus on making sure we end the year. And then what we do is we'll make a presentation as to, you know, how we did in 2025, and without giving forward-looking numbers, we will talk about some of the big picture plans based on a lot of the new regulation. But I gave you a preview. So we're actually looking at new regulation, and we're implementing some of the new regulation, but also understand that regulation takes its time to get voted in, signed in, and then adopted by the regulators. So it's not a simple slam dunk. Anyway, that's to say thank you, everyone. Really enjoyed spending time with you, and looking forward to our next one in a quarter from here. Take care.